Okay, so here we are. It's actually Sunday Globex for Monday, December 10th. So today's December 9th, and Globex has been open for a couple hours. We've had a pretty decent drop already. But I want to go back and review what we had started talking about right here for the DOP signal and talk about this drop and putting two and two together. So in recap, if you watched the other video, what I mentioned that anytime that we have a recovery, this like this, and it really, again, this is proportionate to the market movement that we've had. This was a 78 point from the low of the day to the high. This was Thursday. So when we come into Friday, naturally you'd think that, with the market running up so hard, it's just going to continue the next day. Well, DOP contradicted that. It was down. And we were about 6 points away from the key turns level, but it was still down because price is below the key turns level. And so what this means, if we just take it black and white, what this means is that this run up was very weak, and there's an extremely high probability that we're going to continue to drop even if we climb back up. And so what I'd mentioned was that if we do get to this price and above it, we need strength there. And the easiest way for those of you that are new, or those of you that, what are you talking about when you talk about strength? The simplest way to detect strength in the market, just visually without using any tools, is just to look for higher highs and higher lows that are breaking past a specific level. And in this case, this does the job for us. We're looking at this price level here, and we're looking to continually break highs. Now we set a high. We actually had about 8 or so points in there, but it didn't last long. And the next candle, we didn't surpass that high on the previous candle. And so this is a very strong signal that even this run up here, it's not going to happen. And so we have this tipping point here. And so, we broke through this candle here. Let's make this a little bigger so we can see that. So this would have been a breakdown candle. So we broke through that low, and then we just kept going. So what I had said was that if we can stay below this, heavy selling. So we had about 70 points of play that ended up happening between the key turns level and the low of the day that we have to get in the market. And so because of what had happened, because of this big recovery, if you even want to call it that, and because DOP was still down, that gave us the heads up to sell hard as long as price can stay below this. Now we had this attempt, Globex, and then even into the open for a little bit, but there was, by this candle here, half hour into the market, it's over. It's done. And if you watch other videos, you can often test this as resistance. We got kind of close there on a couple times, but there really wasn't a trade off that price. If we go to a 1-minute chart just to look at it from a different, we can see back, let's see. So even on a 1-minute chart, we broke through it, and this is actually a better view because we can see that this was only 4 candles and we stopped setting higher highs. By this candle, which is only 1 minute after this one, we set lower low, and it's now climbing down. We test this. So there was a period of from 7:50 my time until 8:07, so about 17 minutes or so, that we played off of this line, but we did not set higher highs. So that's really how you can visually see if there's strength there. And that's all you need to know. You don't need to use a bunch of, indicators that clutter up your chart. That's it. It's literally that simple. And so again, here's a nice little breakdown right here. And what I mentioned yesterday or the previous day was heavy selling. We're going to, and by the way, let me clarify that. So when I say heavy selling, so for me, what I'm going to do is I'm going to trade a lot more than I normally trade. And the reason why is because I've seen this for so many years. Let me go back to the 15-minute chart. I use a 15-minute chart because I like to see just a broader basis. Because I've seen this for so many years and so long, and because it's so reliable, it allows me to take greater risk than I normally take because the odds are even more in my favor. So, money managers might call this better pricing. This is not the video for that. But, what you have to realize is that when if a market's going to drop and there's, clear signals fundamentally, etc., that are obvious, or whether it's insider information, you determine that. You have to realize that markets, dare I say, always are driven up prior to a drop, and vice versa. If there's really good information that's going to come out, markets often are driven down prior to a rally. It happens every single time. So if there's a lot of uncertainty, economically speaking, and you see something like this, it's just another sign that we're trying to get better pricing. And so this was pushed up. DOP gave us the heads up that, hey, this run up right here is total BS. This thing is totally weak. It's not going to last. And the only way that it will last, like I said, is if there's strength. And there wasn't. It was completely dead. On the 1-minute chart, we saw that. And we dropped 70 points. And we were already, even, this is for Monday already. And from the high and low, we're at 29.75. And the low is 10.25. So we've already got basically, I mean, this doesn't even look like 20 points, but that's about 20 points almost right there, just in tomorrow's, for Globex already. And it's only been open for a couple of hours. And we're clearly low. So what this means, since it's right here, so there's two things that you have to, and I don't mean to switch topics this abruptly, but it really does coincide, because really this is just one continuous flow. And you have to realize that the markets are fluid. They do not stop moving. They're constantly going up and down. And so we are trading that. Okay, so what this means in regards to DOP is that the further away you get from DOP, or I should say the key turns, the key turns just references the turning point of DOP. That's all that is. So when I say DOP or key turns, it's synonymous. Okay, the further price is away from DOP, the stronger it is. But the caveat to that is the riskier it can get, because we have this much room to play. We have this much room that the market can go up while still being down. Okay, so we can drive up just, kind of like this, DOP is way up here. We had this massive drop, halfway recovery, another big drop, and then we ran up 70 points, 78, actually almost 80, 78 points to be exact, but we're still below it. So there's still plenty of opportunity to get better pricing for short positions. Okay, so that's all that means. Okay, so it's still down. So back to the topic at hand, this is something that it doesn't require practice really. It's not something that you have to practice over and over and over again, like deciphering an indicator, for example. And the reason why is because when price is below the key turns level, it's down. When it's above it, it's up. And as you learned in probably one of the first videos, DOP is not meant to find this low, find this high. Its purpose is completely different. So if we go back to, let's see, December 4th, when we finally broke through and DOP was down, this was when the market really started to fall apart. We had this kind of calm period, and then later on in the day, actually it was still morning, was when it just fell apart. And then it really showed strength. So even if you were a late comer, you have 27.63 roughly in that price range. When the breakout finally happened, actually is a bit higher than that, 66, 27.66, and we've now hit a low of 26.10. Obviously, we're in Globex, but that's 156 points that we've had ever since then. DOP has still been down. So all these bounces that we see, this just allows us to get better pricing. We can play longs. You just have to be more cautious when it's so strong like this, because when it's gonna break, like this. Obviously, this was I believe this was the day that the funeral of President Bush took place. So the market was closed for. It was actually closed that day. Globex obviously was open, but then it just took off after that. It just dropped after that. But this told us, hey, prices or market's down, it's down, it's down, and we're still down. And so we had 156 points over a period of 4 days, and really 3 because it wasn't even open this day. So 156 points in 3 days from technically a quote unquote late entry. If you're not quite short yet, if you didn't get any of this in here or here, DOP's down. But if you didn't get any of that in there, you have a couple breakdowns in here that you can get in on, and it's still down. So anyways, this is a very powerful tool, something that it doesn't require practice. It's not something that you have to decipher. It's not, what is this indicator doing? It's literally up or down, and then we just trade the dominant side, and that's it. There's no, trying to figure out what the indicator's doing. It's up or down, period. So in some regards, it almost doesn't matter what you do, because we have this, foresight, so to speak. It's just a matter of, positioning. If price is moving up, okay, well, we're still down. Is there any prices up in here that I can potentially short or, get in on? And then simply look for breakdowns in this case. If it was the flip of this, we'd look for breakouts, right? And that's it. So anyways, take note of that occurrence for future reference. If we've had a large drop like we've had, and we've had a significant recovery, and on the next day, DOP is still down, that's a red flag. Vice versa, if we've had, massive rallies and then the market drops, those are sometimes, well, they're not necessarily better, they're just the opposite. But they can be better because when the market goes up and then we have, like, if this was flipped upside down and we have, the market's dropping, all of a sudden, panic sets in, and, a lot of people are like, what's going on here? I gotta start exiting my positions. And you have to realize it's most likely better pricing. And what we can do is just open up key turns and look at where that is. And most likely it's going to be, in that case, it would be up. And then we just start buying, and we just get better prices because of all the panic. We just take advantage of people's emotions. So very powerful tool. This is something that you want to look at every single day before you trade. I like to look at it the night before. Usually if I'm there when Globex opens, I look at it, but definitely before you start trading, you got to open this up and see where price is at in relation to the key turns level. And of course, you can reference the day chart to look at, that perspective, but this really is all you really need. You can use the DOP on the day chart, but this gives, just an exact price, and there's really nothing more to it than that. So anyways, just remember to take just a couple minutes every day and open this up. And again, this specific indicator is not just for futures, which is what I have up here. This is the ES. You can use this for stocks, bonds, Forex, gold, silver, cryptocurrency. Doesn't matter what you put it on. This works the same on all markets, which is really nice because it doesn't restrict you to any particular market.